In this video, we'll outline what is remortgaging and what happens when you remortgage. We'll run through all the benefits that you may find, what kind of timeframes that you'll be looking at, and what the process looks like overall. Our aim of this video is to provide you as much information as possible so that you can make informed decisions. When you're a first-time buyer, there's ample sources of information to guide you through the process. When it comes to remortgaging, it's not necessarily the case, and actually remortgaging is just as challenging as the time that you first purchase. Remortgaging is a process that you will go through, and having never done it before, we're here to answer the top 10 questions that are raised about what is a remortgage and how the process works. What is a remortgage? So a remortgage, often people think, is when you're securing additional borrowing against your home, but that isn't the case. So a remortgage is the process that you would go through when you come to the end of your mortgage deal. So as an example, as a first-time buyer, you might take a fixed rate product for 2 years. When you come to the end of the 2 years, we'd need to secure a new mortgage product, and that process is the remortgage. How does remortgaging work? So remortgaging, in essence, is taking out new borrowing on the property to replace the existing borrowing that you have. So the new loan that you secure will pay off and discharge the existing loan that you have in place. When should I consider remortgaging? We would advise that 6 months before the end of your existing mortgage deal is the right time to start looking at your remortgage options. The reason for this is that mortgage offers are typically valid for 6 months, and also it ensures that we could secure an interest rate at today's rates, which would protect us if interest rates increase because you've secured a product, but if interest rates go down, we can always look at alternate options before the end of your current product. What are the benefits of remortgaging? So if you didn't remortgage and you came to the end of your existing product, you would revert to what is called the lender's standard variable rate, which would be much higher interest rate than you're on within your product and would be very expensive to you. So when you come to remortgage, you've typically got two options, one which is a product transfer or a rate switch. Lenders have different terminology, and that would be the offering from your current lender. A remortgage would be a remortgage to a new lender, and ultimately we would assess all the options, but looking further afield, we've got the opportunity to look at the width of the market with the intention of securing you the best interest rate that we can. What factors should I consider when remortgaging? So when we're about 6 months away from the end of your existing product, we would reach out to you and hold a new mortgage consultation, because ultimately we want to discuss with you your future plans, any changes in your own personal circumstances, because these would have a big bearing on what we do when we remortgage. You've got a couple of considerations, but typically the type of product that you go for when you come to remortgage is going to be linked to what your future plans might be. As an example, if you intend to sell the property and move relatively quickly after the end of your current mortgage deal, it's not going to benefit you to fix into a new rate for an extended period of time that may have early redemption charges attached. In addition, we discuss your own personal circumstances. So if you've had any changes in job, any children have come along since we last arranged your mortgage, or anything of this nature, which may impact on your ability to secure borrowing from a new lender. What are the costs involved in remortgaging? So typically the mortgage product that you're taking may have a product fee attached, circa £1,000 normally, and you can either pay that up front or add that to the loan. There may also be some broker fees applicable, but from the lender's perspective, they'll also offer you some incentives typically because they want to secure new business from you. Things like valuations or the legal service that's provided to transfer the charge are often provided free of charge by the lender. Can I remortgage with my current lender? Yes, you can. The process of remortgaging with your existing lender is often called something different, either a product transfer or a rate switch. The process itself is somewhat more straightforward. Things that would be normally expected on a full remortgage application often don't need to take place. Sometimes valuation, credit scoring, underwriting. From your existing lender's point of view, the fact that you're not in arrears on your current mortgage and you've kept payments up to date, from their point of view, is enough evidence that you are a good customer, and they're happy to offer you a new product that would take place at the end of your existing mortgage deal. Can I switch from a fixed rate to a variable rate when remortgaging? Yes, you can. Ultimately, at the end of your product, you're free to do what you choose to do. So we can switch from a fixed rate to a variable rate. We could switch from repayment potentially to interest only. We could change the borrowing amount if you wanted to pay down a portion of the loan, or if you wanted to change the term. All of these things can be amended when we get to the end of your existing product. How long does the remortgaging process take? It can vary greatly. If you secure a new product with your existing lender via a product transfer, this process can be as short as 1 day. If we remortgage to a new lender, it's typically a much longer process. We would say the average would be about 4 to 6 weeks, because there would be a new valuation, underwriting, a mortgage offer needs to be produced, and the solicitor will need to transfer the charge over to the new lender. We would typically reach out to you and start the process 6 months in advance, because this allows us the opportunity to ensure that we are securing the new mortgage offer and being able to complete in time at the end of your existing product, but also we're accessing the best interest rates that we can and ensuring those are secured as early as possible. What documents do I need to remortgage? Every application may have slightly different requirements, but typically for an employed individual, we'd require a passport, 3 months of bank statements, 3 months of payslips, and any payslips that evidence any additional pay that you may receive. For a self-employed individual, it would also be passport and 3 months of bank statements, but it would also be 2 years' worth of tax returns that we would need to see. Hopefully now you've got a bit more detailed insight into how the remortgaging process works, which will help you make informed decisions. If you found this video helpful, please do check out the other videos on our channel, which will offer further advice. In the description below, we have our helpful guide to remortgaging, which you can download free of charge and will hopefully offer some further details on what we've discussed.